Hi, Greg Dorsey here. It's Monday, February 8th at the Leeb Group. Well, if I had to characterize today's trading, I'd have to use the word lethargic. We rallied in the morning only to see shares work their way lower through the afternoon, ending the day solidly in negative territory. Trading volume was again remarkably light, although it did pick up in the last hour as the selling intensified. Chances are we're going to revisit Friday's lows and likely head lower still before all is said and done in this correction. Traders are largely watching what's going on in Europe. The credit market there is betting on trouble as the spreads between countries that are running high budget deficits, such as Greece and Spain, widen against the more fiscally responsible nations such as Germany and France. The question is how things are going to play out, whether Germany will spearhead an EU bailout, if the IMF will ride to the rescue, or if the more fiscally conservative nations force the spendthrifts out of the monetary union. Either way, it's hard not to draw too big to fail comparisons to our own financial system in 2008. Only this time it's at the sovereign level. European stock markets were mostly higher on expectations that the situation there will stabilize following this weekend's meeting of the G7 nations up above the Arctic Circle, at which time the European members of the G7 vowed to hold Greece to meeting its commitments to cut public spending. As is the case here, the European credit markets are far larger than the equity markets, and are more likely to draw the proper conclusion from what's happening there. So we should see a further strength in the dollar as money seeks a safe haven, waiting till the dust does settle. But I want to remind you that the finances here in the U.S. are pretty much on par with Spain's. So the dollar's rally really is likely to be only temporary. Also keep in mind that as with the U.S., the cure for Europe's woes is likely to be inflationary in the long term. So keep that in mind with your investing plan. That's all for today. Thanks for stopping by.